And we're back with you to take a look at our open on the grain and livestock trade with help from Dewey Strickler of AgWatch Market Advisors. And Dewey is based in Franklin, Kentucky. Well, we had a lot of news over the weekend, of course. Sounds like we have a Canadian trade deal in combination with a Mexican trade deal with the U.S. So kind of I guess a regrouping of the old NAFTA. Let's take a look at the market reaction here this morning, Dewey, and see how we're opening up. We do have a firmer tone here. Let's look at corn, first of all, in Chicago. My goodness, it didn't move much overnight, but it is opening about a nickel higher this morning. We have December now up 4 3/4 at 361, March 5 higher at 373. On the soybean trade, it didn't do much overnight, but look at it now. November soybeans 10 higher at 855.5. That's just a penny off of its high already. We have January up 9 3/4 at 869.25. How are we opening in the wheat? Well, the wheat is not as enthusiastic. We have December Chicago wheat actually going down a penny and a half now at 507.5. Kansas City wheat on the first trades, we have December down a penny at 510.25. Minneapolis wheat, here we have the December contract now trading a penny and a half higher at 574. Meanwhile, in the cotton, this is how we're opening up. We have December 41 points higher now at 76.78 cents per pound. Very close to its high of the day and off of its earlier low from overnight already by 140 points. How about that? All right, Dewey, your thoughts on how we're opening up this morning, and what do you look for as we get deeper into October?
Well, first of all, regarding the corn market, we had to break, from the grain stocks in corn, but we're looking at usage is firm in the corn market here. We got a little bit too overbought, and I think we're just going to consolidate here for a couple of days. And I'm looking for the market in corn to continue higher here, and really it's more or less dragging beans with it. Bean market technically looks impressive here, and I have had one pattern that showed that we may get up to about 867 to 870 on the November contract. But longer term, I look for values to go down.
How about the wheat trade, which is struggling right now?
Well, the wheat is really disappointing here. I don't know that we've quite found the bottom in the D's contract in the decline from the 531 1/4 high here. We could go down and maybe get a little bit below 505.5 here, but longer term, I look for wheat to move higher here. The problem with wheat is we just don't have the exports. We still are looking at the Black Sea region is still commanding all of the exports here. I mean, that eventually is going to change. It's just slow in coming.
And if we could take a quick peek at the dollar value too this morning, a lot of folks very interested on how that may or may not be impacted here with that Canadian announcement. The dollar flat on December, not moving at all, really, 94.770 right now, and that is basically unchanged. It does look like the Dow, though, is up about 208 points right now. We'll come back and talk about livestock. We'll see how they're opening up with Dewey Strickler when we come back. Dewey Strickler is talking with us right now. He's with AgWatch Market Advisors. He's based out of Franklin, Kentucky. Dewey, what do you say we take a look at how we're opening up our livestock trade? Had some fairly sizable reports last week. We had a week ago, we had the cattle on feed report, then we had the cold storage report last Monday, then we had the quarterly hogs and pigs report last Thursday. So lots of stuff being thrown at the livestock trade. This morning, as we start out a new month, we have October live cattle 85 higher. We're now at 114.30 per hundredweight, just one tick off of our high of the day. And now we have December 77 higher at 119.62. Meanwhile, February up 90 at 123.70. Moving on to the feeder cattle trade this morning, we have that October contract gaining $1.24. We're at 159.42 on the high of the day right now, and off of our earlier low already by $1.20. We have November up $1.25 at 159.30. All the contracts on the feeder cattle trade are well over $1 higher, or at least $1 higher. Let's take a look at lean hogs. How are we opening up here? On the lean hog trade, we have October up $1.20 at 63.38 per hundredweight, and that is about 7 cents off of its high of the opening range. Meanwhile, we have December up 68 at 58.60, February 70 higher at 66.55. So bullish news for everybody on the livestock trade this morning, Dewey. Why is that?
Oh, I think it's because of the announcement over the weekend of having a trilateral trade agreement similar to the NAFTA here. I think that's given us some support to our meats today.
Do you think that the rise in the stock market is having any role to play in this? Sometimes in the past, I know they used to associate a higher equity market with more demand for beef.
Well, you know, with the stock market being up a couple of 100 points, it certainly doesn't hurt anything that's going on in the meats today. And I would say that we are probably getting some support from that.
So how do you look at this livestock segment here as far as the demand tendencies? Once you get into October, and now I guess we're going to have to look forward to the holiday period, what kind of demand tendencies do you see when it comes to the beef or the pork side here?
Well, generally, you see, a little increase in demand, as you said, getting into the holidays. But, on the flip side of that, we've got a pretty healthy supply of cattle and hogs here as well. I'm looking for the Dees contract to probably go up to about 123. And then I think you're going to see a real hard break.
Now, we had the wholesale beef trade on Friday afternoon reported by USDA for the beef cutouts. And I thought that was interesting. We had the choice going one way, we had the selects going the other way again, and by almost equal amounts. So we had the choice going down 83 cents in value at 203.88, and then you had selects going up 88 cents at 193.44 per hundredweight. So they narrowed up that spread by basically about $1.70 or so. Spread stands at $10.44 right there. On the hog trade, when you look at the livestock summary, we had a lower cash hog trade for the carcass basis hogs, but live basis hogs were actually up about 21 cents nationwide. So we had a weighted average of 48.70. Do you think the cash hog prices have kind of peaked out for the time being or not?
They might have a little more left in them on these contract of hogs. I've been looking for them to go up to about the 60-cent level here. And as we talked today, the market went up and set a high here at 59.30. And, of course, we certainly backed up. We're still up on the day. But you may want to look here. We possibly could be trying to put in a reversal on the hogs today. Just have to see where they are at the close.
Ooh, interesting. Okay, well, thank you, Dewey, for talking with us today. Dewey Strickler of AgWatch Market Advisors in Franklin, Kentucky.